Trading the Asian sweep in the London session was hard until I discovered this. This will be a full course going over common mistakes when trading the Asian sweep, Asian range types, high and low probability, scalping the Asian session using one specific level every single day, finding daily bias. All of this can be found utilizing a small piece of price action, which is the Asian range. If you appreciate my content, then make sure to hit the like button, subscribe to the channel. This is Mulham and let's get into it. So when it comes to my trading style, I cannot trade without having Asian session range on my chart. What is the Asian session range? It's a price action that develops within the Asian session time window. And any time that I mentioned on this video or any other video on my channel, they're all in the EST time zone, in the New York time zone. The Asian session timing is from 20, which is 8 p.m. until midnight. It's all EST time again. And this Asian session is usually a consolidation or a range, which means that it's a low volume. The importance of the Asian session range, engineering liquidity. In other words, engineering liquidity means that after that, there's going to be a manipulation. So liquidity leads to manipulation. Without liquidity, there's going to be no manipulation. Now, the importance of this is that, and that's why I use the Asian session every day. And without it, I cannot have a framework for my day. So the importance of the Asian session is that it's the reference to trading either London or New York or both. So if you trade both, you're going to have the Asian session range as the reference to your, trading the London and New York session. It's your framework. And the importance of it, again, engineering liquidity is accumulation, right? Accumulation is range, and Asian session is usually a low volume and usually a consolidation. So it's an accumulation, which leads to a manipulation. So it's a good time to trade, and it's a good level or a good range to highlight every day in order to capture the manipulation, and after that, the distribution. Now, Asian range, regardless of the naming, right? So it's Asian range, but it could be also trending. So regardless of the name, it could be either ranging or trending. Now, ranging, it could go from 10 to 20 pips. Trending could go from 20 to 30 pips. But this is not the most important aspect of looking at it. It's by how you look at it visually, right? How it looks visually. Now, let's say you have something like this. What is this? That's a structure. That's price going to the lower side, creating lower highs and lower lows, right? That's a downtrend. So that's not ranging, that's trending. So when I see something like this, highs, lows, I see breaker structures, and I see, either low resistance liquidity runs and high resistance liquidity runs, then I know that this is not ranging, this is trending, right? So just visually looking at it, you can see if it's trending or ranging. Now, a range would be equal highs and equal lows, or almost relative equal highs and relative equal lows. So I want to mostly try to focus on the ranging one. It's going to be easier to trade. It's going to be easier to spot the manipulation. When it's trending, it's going to be a little bit harder and more tricky to capture that manipulation or that Judah swing move. Now, the main goal of this video is that I want to show you this common mistake that a lot of people do. And every day, even in my Discord, I see a lot of people making this mistake. What is this mistake? It's when a lot of people just looking for the Asian session as a reversal, right? So they're looking at the Asian range, high and the low, and they're looking for a sweep on one side and, a reversal to the other side. So for example, sweeping the low, then taking the high, or sweeping the high, then taking the low. Now, the thing that it's not going to be all the time sweeping the low and taking the high. Now, forget about the high. It's not all the time sweeping the low. It could be breaking out below that low. How do you know that? That's what I'm going to show you in this video. I'm going to go over the types, the frameworks, different types that you can see in different days. So you're not only counting on this, just taking the low or taking the high and then spotting the reversal. It could be a continuation. Now we're going to be focusing on the Asian range types. So understanding the Asian range types help us follow the right framework. Each day we have different type of Asian range, which leads to a different type of a framework, and understanding the different types is going to help us not to get trapped in the wrong scenario when we have a continuation. We're not looking for the reversal or the opposite. So we're going to go over the types one by one and show you the pros and cons of each ones and how to build a whole framework around that type. Now, the first type is going to be the expansion near POI, near a point of interest. What does that mean? So the first thing is expansion. So it's not ranging. So we have expansion, which means that this is not the highest probability one, but still, if you know how to, build a whole framework around this and how to use it the right way, it's going to be very, very easy to execute. It's just that the expansion or the trending one is not the highest probability, but when you understand this specific type near a point of interest, expansion toward that POI, then you know that, okay, this is a good framework. So we'll be having a trending Asian range approaching a POI. So the trending was on the same side or toward that POI. The low or the high is going to be swept into the POI on the London Open. So you see, we have Asian session from 8 p.m. to midnight. Then the low of the Asian session is swept inside of that POI, either fair value gap, order block, liquidity sweep. We have the sweep here. We started going lower, deeper into that POI, and then we got the breakout structure here. This breakout structure confirms that, okay, we are to go up. We have this low, most likely the low of the day. We are to go up. We could follow the order flow from here, or a fair value gap here. Price could come lower and go up. That's the direction. Now you see, an example of this is that we got Asian here, London and New York. This is a delayed manipulation, but it's the same. It's the same. So we got a 4-hour order block here, which is our high time frame POI. We have Asian range, which you can see that it's going to what side? To the upside, where we have a 4-hour order block. So it's approaching that order block. That's the first thing we see. Now we're going up. What do you see on this Asian range is that it's trending. So it's literally going in one side, which is the upside. So it's very bullish. What happened on the London is a little bit of an accumulation or a range, a small range. So we did not have a real move or the real manipulation yet. Now, why this happened, you're going to know in the next slides. We're going to know when it's going to be, a manipulation on London or when it's going to be an accumulation on London. What happened after is price sweeping the Asian high inside the 4-hour order block in the same direction of the trending. So you see, it's trending here on Asia to the upside. The manipulation is going to be to the upside. We sweep here. We started to come lower. You see, market shift here, as well as an inverse fair value gap confirms to us that, okay, we are to go lower. And you see after that what happened? Prices keep going lower, right? Order block going lower. Again, liquidity purge going lower and going lower, and even on the next day. So this is the Judah swing, and even if it's a trending Asia, we can still count on this and trade on it. But there is a higher probability one, which is going to cover on the next slides. Now the second type is the expansion into and out of a POI. What does that mean? That means that we have a POI, fair value gap, order block, liquidity, whatever. 20 to midnight, we have Asian range, and it's not like a range with equal highs, and it's not a range like equal highs and equal lows, but it was trending on one side and trending on another side, or in other words, a V shape. So displacement on one side, displacement on another side. And where was the reversal happening? And this is actually the smart money reversal, the SMR. When we have a smart money reversal, what does it tell us? Okay, we're starting the reversal, and that high or that low is going to be protected. In this case, it's this low right here. So it's going to be an expansion into a POI and out of a POI. You see, expansion in and out. Then the high or the low is going to be usually protected. It's going to determine the direction. So you see, creating this low here into a POI, displacement above, it's telling me that we are bullish for now. And the significance of this is that when we have this type of Asian range, the price will respect the Asian range PD arrays. That's a good thing. You see, respecting PD arrays, but it's mainly this one because this is in the Asian range. Now, why this happened? Because what happened is price was actually trending lower in order to reach that. So we did not wait until the London Open to go to this POI. We actually filled this POI inside of the Asian range and then, or the Asian session, and then we started going higher again. So displacement in, displacement out inside of the Asian range, and then we have a breakout structure. Any PD array in here is going to be respected. Now, the mistake that a lot of people are going to do, which is really a silly mistake if you don't understand those frameworks or Asian range types, they're going to look for this low to be taken or the high to be taken. And what's going to happen is the low is not going to be taken. So they're going to miss a lot of trades not taking this PD array. The other thing is this high right here, they're going to look for short, when in reality, the higher time frame now is bullish. And this significance in the price action is telling us that, and this right here, this low, it's telling us that, okay, we are starting to go up. We're starting a new market makers model, right? Respecting PD arrays going higher. So this is nothing but a short move to the downside in order to mitigate a fair value gap here or any other PD array to go higher. That's the reality of it. It's not price, it's going to take the Asian high and then reverse to the low. No, the low is going to be protected. The high, they're not going to be significant reversal of that level. No, it's going to be a small retracement to another PD array to go higher. So avoid this mistake. Do not make this mistake. Know that if the price is going in and out of a POI, then that low is going to be most likely protected. A very clear example on that is 30-minute euro dollar. We can see that price actually, even before the starting of the Asian range, what was happening is a lot of expansion toward a POI on the higher time frame as well as a previous week high. So we're going above, and you see the start of the Asian range. What happened here? We did not create a range and then waited for the high to be taken and go lower. No, what happened here is the smart money reversal actually happening inside of the Asian session. You see, we're going up, going up, going up. And what happened here is inverse fair value gap, which is what? Disrespecting a fair value gap, creating another fair value gap, respecting that fair value gap. And you see this box from here to here and this level right here. You're going to know why this level is very significant in the next slides and how you can actually scalp based on this specific level every day and make money. Okay, that's a gem that you got to learn about. So we started to go lower. We got a market structure shift and we got inverse fair value gap. We got a fair value gap on the other direction. We started going lower. Now think about it this way. What a lot of people are doing here is they're looking at this high and this low and they see that, okay, the low is taken. They look for longs here. Then you see they waited for this POI here. They look for longs here. They look for another order block here. Again, longs, and they keep going for longs when in reality the direction is very clear to the downside. And why? Because we have expansion into and out of a POI, right? So, and we got the respect here, we got the market structure shift. That's it. We're going lower. Now they're gonna look for longs, lose here, lose here, lose here, lose here until price comes here. And sometimes price will reverse and entry, and it's okay. I mean, for me, if I was actually losing from here and from here, I'll not be trading this no more. That's it, because most likely I hit my max loss for the day. So that's the mistake people are doing. You gotta be with the order flow, and this second type tells you where the order flow is. Now into the third type, and that's the most profitable type and the easiest one to trade, which is the ranging and sweep into a POI. So we want to see a ranging Asian range, because this is how it should be. It should be a ranging. It should be a consolidation. And you're gonna know why. You're gonna know with the quarterly theory, the relationship between the range or Asian range being a range or being trending in relation with the manipulation. Okay, so that's what we're going to be learning later on the next slides. So for this type, what I want to see is Asian range, and I want it to be a consolidation. I want to see a higher time frame POI above or below that Asian range. So in this case, we can see that we have a POI below the Asian range. Now when I see that, I know that, okay, POI means direction, and I know that the sweep may be going to be to the lower side, POI to the lower side, which tells me that what? The direction is to the upside. So that determine the direction And this is the best Asian range type to trade. And you're going to know why. So simply, we're going to be looking for ranging, Asian range. We're going to be looking for the sweep after the London Open. Could also be at 1:30, so a little bit before 2 a.m. We get the sweep, we get the market session shift, or you could look for CISD here, changes the delivery, fair value gap here, and that determines the direction, fair value gap here going up. So this is the best one, and we're going to go over some examples now. But before that, I want to really show you something very important about this. Why is this the best type? If you have a little understanding of the quarterly theory, you would know that we have two scenarios, and a lot of people actually only focus on this scenario, the AMDX. So X refers to either continuation or reversal. In other words, it's going to be trending, right? It's going to be displacement, because it could be something like this, continuation to the upside, so that's trending, or it could be what? Reversal, and that's also a trend here by itself. Now AMDX, A, accumulation, manipulation, distribution, and X, as I said, reversal or continuation. Now, why is type 3 the best? When it comes to Asian range and quarterly theory, we're going to learn that in order to have a manipulation on London, what I want to see is a ranging Asian session. And why? Because this is the first scenario. Now we have another scenario, is when the first session of the day, or the first quarter of the day in this case, which is usually the Asian session, if it's not an accumulation, then we might have a delayed manipulation. So manipulation is going to be on the third quarter of the day in this case. So if I don't see an accumulation in the first quarter of the day, which is the Asian, so if it was not accumulation, then there's not going to be a manipulation. There's not going to be manipulation. That's why we need to see an accumulation one, right? Accumulation on the first quarter of the day or in the Asian session. When applying this and when following this specific scenario here, it's going to lead us to this timing of the manipulation. So manipulation time is going to be from 1:30 to 3 a.m. That's the manipulation quarter of the day. Going to be on the London session. Usually it's going to be something like this. Asian range, manipulation time, sweeping the high, going lower. That's the high of the day most of the time. Now, example of this, we got Euro USD here, 15 minutes, and I do trade this every day on the Discord. So with everyone, we always trade this, and people are making money of this. Okay, they're making money. So you see, 4-hour fair value gap, price is coming into that fair value gap, and we got an Asian range, which is a consolidation. So we have low, high, low, high. It's a little bit, you know, not a real consolidation here, so not equal highs and equal lows, but it's still a range. It was not going like this on one direction expansion. So we got this one. What happened at the start of the London kill zone? So this is 2 a.m., right? And here's 1:30. What happened here is we swept the Asian low, we push higher, we created an inverse value gap, a fair value gap on the other direction, also respected, started going up. When I see this signature in price, I know that this is the low of the day. This is the low of the day most of the time, and that's the bias that I'm gonna go with. It's gonna be what? Looking at this low, long bias or bullish bias, and look for the continuation on the New York. And we started going up, and you see for the whole day, that's the real reversal happened here inside of this 4-hour fair value gap. So ranging Asian, sweep on London, determine the direction, and we started going up. Now another example is we got 1-hour fair value gap here, as well as a liquidity level here. Now we see we also have this previous London high, right? Not previous, but an old London high that is not taken. We started going up here, and you see we had low, a little bit of a high, and we're still approaching that, but I'll still consider this as a POI. We got 1 hour because it was not that big expansion. This is 15-minute, remember? So 1 hour fair value gap here. Price was coming close to that, created a range here. So this is a range, and we took that 1 hour fair value gap. We actually respected. We started going lower, creating this inverse fair value gap. This is the first sign of reversal. We started going lower, respect this fair value gap. We started going lower, respect this fair value gap, started going lower, respect this fair value gap. So you see how this high here was the high of the day again, using the same framework, and then it determined the direction after. And based on this, you could have taken your 2 trades a day. And if you haven't watched that video, make sure to watch 2 trades a day Mulham trading. Watch that video. It's going to be suggested now. The same thing happening here. You see it also happened here, but we're going to focus on this one. We did not have a ranging, but we started a range here. So I can still consider this as a range. I mean, it was not ranging here, but it was ranging here at the end of the Asian session. We see what happened here is we swept the low at the start of almost at 3 a.m. into a 4-hour order block and also a daily fair value gap. We started going up, a market section shift. We come lower on Euro kill zone and we came to exactly the OTE. So from 79 to 62, we reacted from there going higher. That's another bias for the day. So you could have traded this CISD here, traded the OTE, and then another trade somewhere in here, and we started going higher again. You see, so it's pretty easy. I don't take 5 to 1, 6 to 1, 7 to 1 of those trades. I'm more into 1 to 3 now. So that's what I get almost every day. And you see, we got some respect of this level here. You're gonna know why in the next slide for that scalping opportunity every day. Agent range 50%. That's a gem that you really want to take advantage of. So when we have our agent range from 20 to midnight, you're going to be marking the high and you're going to be marking the low. Either it's a range or trending. So any tab of agent range, you can still trade with it, right? So we're going to mark the high, the low, and then you can grab a fib from the low to the high or again box and then mark the 50%. You're going to notice that what happened is price respecting this level. You see, we started going lower, we came back to that level, we reacted of it, we go up, we reacted at that level, started going lower. Again, even if we are bullish, you're gonna still see a reaction of that going lower and then breaking above, retesting that level, going higher. I'm gonna go over some charts now and show you how you can take advantage of this and show you how this level is very significant. Now, the importance of the 50% level. So let's say we're gonna be looking at this price action here. So you see, we got agent range. I'm gonna take my gam box, which is just looks like this, right? 0 and 150%. I'm gonna go drag it from the low of the agent range to the high of the agent range and maybe drag it to the right. You see, this day it was NFP day, so not really the best day. We come to this other day, right? And as I said, any tab of agent range, we're gonna drag it from the bottom to the top, and you see what happened here is price breaking below, coming above, rejecting from here, first opportunity, second opportunity, going lower. And if I drag it more to the right, see, again, we reach it one time, started going lower, another time, and then even on the next day, price is still respecting that level. So you see right here. Now the same thing happening on this day. I'm gonna take my gam box from the high to the low, and what do you see happening here? Actually, I'm gonna grab it to the right. What do you see? Immediately after the end of the Asian session, price came to this 50%, started going lower, and after that we're just below the Asian range. The other day here also, I'm gonna take my gam box from the high to the low, which is right here. And what do you see happening? Immediately after the end of the Asian session, after midnight, we had price coming back to this range, or in the 50%, respecting, going lower. That's a huge opportunity. So see, that's almost, it was not the high of the day, but the high that you could have captured, right? You see, now this one, it's even better when we have what? Another PD array. So we got this order block right here at the same level, price started going lower. And it happens all the time. So you could have gone to, you know, another time frame, like 1 minute time frame, and try to catch any, you know, scalping opportunity from that level. And the same thing happening here. 50%, a small scalping opportunity. It almost happened all the time. You see, we got this range here. This one was a bit tricky. We're gonna drag it here. There was, so you see, we go above a little bit of a retracement, started going up, and we don't come back to this level. You see, we have another day here. This one, we got Asian range from here to here. We go above, we go below, so there are no opportunities. Here we got a reaction. We could have taken this one as well as this one, and then nothing much. For the next day here, we have a trending one. Could have taken it like this, and you see, almost very close to 50% into this order block right here, and we started going higher, and then we go below, we go above, and we're just hanging around that level until we get a real breakout where we go and just go in one direction. But it's a very significant, especially when it's a big trending day or when it's a big range, right? So you want to see a big range like this instead of a small range like this. This is more significant, and when you take trades of the 50%, you can actually get some good reward to risk, unlike a small range where it's going to be a very tight and you cannot get a lot of reward to risk. Now, when it comes to identifying the bias, the Asian range will actually help you determining the bias every single day, just by looking at the Asian range, highlighting the price action inside of it and what happened after, especially on the London kill zone. So if we have Asia low swept, and then we have a market such a shift and displacement to the upside, so you see we have something like this, low taking displacement above, then especially if there's a fair value gap also here, it's going to tell me that the bias is bullish. Now on the other hand, if we have Asia high sweep and then a market such a shift and displacement to the lower side, is going to tell me that the bias is bearish. And this bias, when looking at it and looking at the price action leak that happened after, looking at this, you could have gotten a trade on London, and after you could have gotten a trade on New York. Again, I already told you about 2 trades a day. This is the video. You gotta watch it in order to catch those 2 high probability trades every day, using the same logic that I'm explaining right now. Another gem to share in this video, which is low resistance liquidity and high resistance liquidity and the relationship between them and bias. So imagine knowing the bias. Now it's not gonna be as high probability as the market session shift and the inverse fair value gap and the other methods that we use. But imagine knowing the bias just by looking at the chart, just by looking at the price action inside of the Asian range. Imagine that. How do you do that? Simply, we're gonna be looking at where we have our low resistance liquidity and high resistance liquidity. What does high resistance liquidity mean? It means that we have breaker structures, or we have simply liquidity already taken. So you see, on this side of the curve, we have liquidity taken. On the other side, on this side, we have low resistance liquidity, which means that we have this high, we have some liquidity here, and we have more liquidity here, and more and more. You see, liquidity not taken. When I see this, I can actually establish a bias just based on this. At the starting of the London open or the London session, I would know that price is actually gonna go on the side of the low resistance liquidity. So if I see a sweep here already in the side of the high resistance liquidity, it's telling me that price is now bullish to go to the other side, to the low resistance liquidity. That's how you find bias, just by looking at just a small piece of price action. Now this could be a temporary or short-term bias, and it's not going to be the long-term bias, and unless you look at the higher time frame, POIs, the drawn liquidity, and everything else. So make sure to use this and let me know how you find it. So you see, in this day, we have high resistance liquidity here just by looking at this piece of price action, right? I'm looking at the Asian range. You see, we have high resistance liquidity, another liquidity taken, another liquidity taken, another liquidity taken. On the other side, we have high not taken, high not taken, high not taken, high not taken, and another high not taken. So you see, it makes sense to you that price is actually gonna go to the side where the liquidity is, where there is some liquidity to be taken, which is the side right here. And what happened is at the London open, we took liquidity, this liquidity taken, fair value gap respected, prices go into the direction of the low resistance liquidity, just by looking at the Asian session by itself. That's also another example. So you see, breaker structure, breaker structure, breaker structure, until we get what? Inverse fair value gap, and we get our market session shift. Where does price go? To the low resistance liquidity. And then we started going higher from there. Now, if you want to become profitable using the Asian session strategy and the, utilizing the Asian session and the London open, then this is the way. So this is the whole framework you will need, with the timing, with the conditions, with everything in details. If you really want to become successful, you gotta use this. I explained everything about the Asian sweep in this video that's gonna be suggested now. I give you everything you need, and a lot of people, it's been almost, 7 months, and people in my Discord still using this every day, and they're telling me that, okay, this is the thing that we settle with, This is what we look for every day, and this is what I've been looking for every day. If you look at my channel, you're gonna see that the first video that I uploaded almost, I don't know, a year and a half ago was about agent sweep, and I still use it until this day. So this tells you something. This is the way to be successful with agent sweep. That's it for the video. I hope that I've done a good job, explaining everything and delivering the ideas that I have on mind on the easiest way, because it's still a struggle, because I was trying to actually give my experience in the easiest way. There's sometimes where you become more like subjective, but I was still trying to put it in a mechanical and objective way. If you like this video, then make sure to hit the like button, share it with your friends. Maybe some of your friends need this and struggling with the agent sweep. This is Mulham, and I'll see you next video.